Boom, recording and live, ladies and gentlemen. It is Monday morning, and today we're going to be taking a look, you probably guessed it, at Bitcoin and Ethereum. We're going to take a look at a few of the other market indicators that we normally go over. The VIX, the S&P 500. We're going to quickly look at the DXY or the dollar index, hopefully. And then I also want to take a look at some of our other, kind of growth moments through our strategy as we go, because I think that's such a valuable part. So make sure you stick around to the end of the video for that stuff. But for now, let's just dive in and take a look at Bitcoin that we've had drawn up here on the daily. So you'll remember this, although it does have a few new lines that I've added, which we will go over today. So I'll start actually by removing the lines that we want to take a look at. And first off, notice this main trend line here. Now, this trend line is very strong and a very key indicator for a few reasons. The least of which is actually here when we look on the weekly. So we'll start with this. I've gone over this a few times. I've mentioned that this is one of my favorite long-term indicators for a healthy bull market. And it is the retest of the 21 weekly moving average, this white line here. It also happens to coincide again with our trend line here. So let's just for fun, we'll drag the trend line right down to the moving average and we'll just kind of keep it there. So the reason this is so important is because it's been a consistent, healthy moving market indicator for many indices over the years. And when you see a nice, healthy retest of the 21 weekly moving average, it is a clear indicator that we are about to start a bull market. Now, there are a few ways to look at this. So I'm going to start by removing our moving average here. I'm actually going to remove it. As we can see, it's right here at around $10,000. And below that, we have around $8,840, our 50 weekly moving average. So what does this mean? And can we make a valuable assertion out of the growth and the change of these things? Now, again, this trend line here is quite important because our previous regression line brings us as low as $6,000. And as we've seen with other markets, other tokens, other plays that we've been through, if you don't, you can very easily come back down to test this lower area. Right, so as a market indicator, there's two important parts right now. Again, the 21 weekly moving average and this trend line, because the lowest trend line below that is like $6,000 or something, right? Now, what I like to do is kind of start to look at more of the sideways action, because we are always looking for Wyckoff accumulation and distribution areas. What we do is take a little bit more of a kind of a close range look at what's forming on the 4-hour. And question whether are we seeing the potential of a new reaccumulation cycle actually build up here as well. So I will often look for these trading ranges to form as we move and change cycles, right? So when we saw the original selling climax, this became our potential automatic rally. Right now it could turn into redistribution, so we'll have to keep an eye on it, right? But I suspect that we would find another area of support and then a break up here. Now, if we don't and we come back lower, there's a very easy test of $9,200 for our point of control. And again, this point of control will change depending on the visible range we have, right? So again, the important part to remember here is that the point of control for all of Bitcoin is way back here. So it becomes more and more helpful as we change the data on the screen, right? So let's remove the previous peak outs and even just look at the selling climax. So our selling climax is actually our point of control, around $3,800. So it's very unlikely that we're going to go this low, right? But there's still a lot of reason to think we could hit around $5,800 to $6,000. Now, let's look at it from a positive indicator, right? Let's take more of a positive approach instead of a negative one, because I think it's important to be optimistic as well. Is say that we see a reaccumulation here and then a breakout, and we see our SOS to $14,000. That would be fantastic. Okay, well, what if we break this new trading range and we come down? Well, then there's a reason to say we could go a lot lower before going higher. I don't know what's going to happen. This feels like the more likely case, but this is also me being optimistic. Right, me being pessimistic. Well, there's a lot on the table right now. We could be a few steps away from war and civil unrest, like, seeing the volatility index again. One of these indicators we want to go over and take a look at. When you look at it from the weekly, even in the height of the pandemic, global lockdowns, we never actually got as high in the kind of the fear of the markets as we did in 2008, which would make sense because the pandemics didn't really have to do directly with the market or the money system. So now that the monetary system isn't in threat, the VIX is still creating these big spikes, and it might do so for quite some time. We are in a volatile area, and any spikes in the volatility index are going to lead to a change in the price of our underlying assets, effectively, because they are a risk-on asset, right? So when I think about and kind of feel what's going on, I think there's a lot more uncertainty now about some of the bigger things. More players have more time to see how much damage is coming in potentially from the pandemic and the stress that it will cause on society at large, and whether they're just going to keep printing money or not, which seems like a very obvious indicator. Now, one of the things I want to go over is the time that some of these things take, and this will kind of lead us into our next conversation. But what we're looking at here is the dollar index on the weekly from 1968 to 2020. Boom, right here. So we always have to remember that there's a very long story taking place here, and it's above pretty much everyone's hand to be able to, like, there's no way in 1979 you were thinking yourself Bitcoin in 2020, right? Maybe you could figure it out as a technologist. You could see the evolution of the internet and the inevitable digitization of money and the inevitable problems and questions that would come from that back in the 80s, I think was a very strong possibility for a very select few. But not the average person. Even in 2000, the average person explaining some of this stuff would be extremely complex. Like, even to me, like, I would have not cared back in 2000 at all. I didn't care at all. Now in 2011, 2010, I was paying a lot more attention because I was becoming interested in business. So the reason I'm using the dollar index right now, not because it has a negative correlation with Bitcoin's price, which it does to some degree, but it's actually a different story I read over this weekend, and again, which brings us into the time frame. Now, so this is from a trader named Larry Williams, and he was offering his weekly insight. Now, one of the things I thought was really interesting was this. He calls it the Machu Picchu trade. Now, I like Machu Picchu. I think it's a megalithic site with obvious evidence of a society and civilization that lived here way before we got here, and has a much higher level degree of understanding of construction than we do. So that's weird. But anyways, aside from Machu Picchu here, what I liked about his is this idea of this signal that him and his wife had picked up while traveling through the area. And it was intensely focused on seasonal patterns that constantly play out over time. We've gone over this before, and I think it makes a great highlight for what I want to say next. So I'll continue reading this. He says, generally, if you're selling on September 22nd in the short term of trades, 100% of the time over the last 22 years yielded a positive return. Okay, well, hold on. We should write that in our calendars, ladies and gentlemen. Okay, so what is this? That's 100% of the time over the last 22 years. This Machu Picchu trade has worked. Now, let's talk about this. Because we've gone over it. We've talked about the realization that there's a type of spring and fall association to things. So let's use Ethereum. We'll start off with one of the bigger ones too before we go a bit deeper into the thesis. But because what we're trying to do here is always write a thesis that changes and evolves, so it becomes better and better over time, and becomes more reliable over time. So apparently, the second or third week of September, you should be generally short because 100% of the time, the last 22 years, that's netted a positive result. Well, why is that? Well, we had talked about this briefly before, and again, remember, I'm just becoming old enough to recognize some of these larger patterns. Larry Williams is 76 years old. Having time on deck to witness and observe these things is really the rewarding aspect because it gives you the confidence to make your own decisions. So in the spring, lo and behold, took hold and took foot right in the middle of spring. This is talked about in the book, The Game of Wall Street and How to Play It, written 1898 as well, and then also the time frame that comes after. So I made a critical mistake here. I made a mistake that I want to share with you, and it's because I'm always learning and only so old. I can only witness so many of these things as time moves because they're relevant, right? Or at least they appear to be relevant to us as human beings who have like a set lifespan of some kind or another. So from the spring to where we were at the peak in Ethereum was 175 days. Well, wow, that's mighty close to about 180 days, isn't it? It's almost to the T. So I think what we start to recognize, and what Larry Williams and what the book written in 1898 by The Game of Wall Street, How to Play It, has pointed out, is that there are actually very reliable seasonal patterns to this. They might even be more affected from coming cycles like, let's say, a presidential election too. So where does that leave us? Well, I think we can probably start to measure these things out and see, again, a systematic play out of the period of time that effectively moves, right? So here we have, again, we're looking at Ethereum, and what we're looking for is the next cycle of momentum. So we knew we had our SOS, beautiful, about pretty much exactly 180 days in. I think we're going to have something between a 90, which would put us at November 9th, to 180 day cycle, which would put us at February 21st. So note how February 21st also would align with a spring and a potential bull market into the coming fall. So I'm going to start actually categorizing, and this is the difficult part when you're first starting to trade, is being able to think in these big cycles, right? You're like, well, I want to make a bunch of money. I've seen a bunch of money from people that bought Link, and and they are continuing to make money. Well, let's look at Link today. Okay, well, Link is ultimately down. We're seeing a much larger market cycle come into play here. You might actually see the perfect formation of an accumulation range for Link or another distribution range. We don't know. Could go as low as $4 here pretty easily for Link, right? So when you're playing this game as an investor, you want to be able to keep your eyes aware on the undervalued assets, right? So we know Link from a technological standpoint is fantastic, and they're already taking market share to their particular niche, right? How valuable? Well, I don't actually know, because I'm not that super smart when it comes to tech. I'm just following the money with this type of stuff and understanding the time that it takes. So do we see an accumulation range and a breakout, or do we see accumulation or just another distribution pattern and then a breakdown? This is what the coming 180 days is going to provide to us, right? So just like we're looking at Link, we're only 49 days into the part of this distribution. It's probably going to take something like 180 to see where it inevitably sits, whether it's ready to go into a reaccumulation area. And does it make this a $5 to $8 area at the bottom, or does it come down to 4 and take a much longer cycle, like 480 days, alongside the growth of Ethereum, right? So now that we know that there's this larger market cycle at play, it becomes easier to be more patient with everything. So with those of you that are in the private bear den, one of the things I stressed at the beginning was that I try to sell around 70% of my position in the SOS. Well, why do I do that? Well, look what happened to BAT. BAT's gotten pushed all the way down to its lowest regression line from 2019 that actually continues to extend all the way back to 2017, technically, if so, like this, right? Boom, there it is, perfection. So these, even though we see signs of strength in the market, the rest of the things that are going on in the world, and because we're in a volatile area, can be very volatile to the downside as well. So we haven't got into shorting, etc. I don't suggest the beginner even does it. It's just better to study over time and take a larger market cycle approach. So take a look at BNB, right? Beautiful, boom, SOS, right? And then boom, there's a huge opportunity to go short again, potentially. Now, I don't like to go short because I feel that this entire market is basically asymmetrical, which, and I'll explain it simply like this, which is I could lose everything on that trade, or it could have a 10x or 100x potential upside. That's basically the easiest way to look at asymmetry in an investment or from a trade perspective. I could lose it all, or it could be worth 10 to 100x more. Generally, traders like to go a bit more, I want to risk 1 to be able to make 3. That's more of like the hedge fund standard, right? So even playing in this sector from let's say even the venture capital, it's much more like I'm going to lose 9 and get 1 that does 100x effectively. Right? So we play and calculate that in this game. A lot of the bigger players calculate that in this game. Ultimately, what we're trying to do is increase our chance of success over time and get much closer to that 1 risk for 4 or 3 return. The reason being is you're always going to make mistakes no matter how good of a strategy it is, right? So we had great profits. Boom, we built our entry. For those of you that had joined the Bear family, you were watching, we built this beautiful trade into this pennant. Sold 70, maybe 75% of the position all the way up during this 18-day run. And then now I have not re-entered since then. So I'm going to be very patient now, because what I'm witnessing is that if you're not patient or short, which again, I just don't like to do in these markets, they have a lot more room for upside than downside, and I don't want to pretend I'm smart enough to know how far the upside could go, like Link at $20, right? I'm not going to bet against it unless I see very clear hypodermic tops. And we saw very clear hypodermic tops and distribution. You saw it here too, but again, you didn't want to be short for too long because bang! Right, and look how small the accumulation range, or the reaccumulation range here on Chainlink was. It was a tiny box. Look at this box. Nothing, right? It was hardly even noticeable. And then boom, higher high, higher low, higher high, higher low, higher high, higher low. So you went, if you would have stayed short here, you would have been totally wiped out. It was 150% gain on afterwards. This is why I don't like being short in an asymmetrical scenario. I much rather look for accumulation ranges and then go long and then potentially lose that trade from it failing. Okay, so I hope this helps. What I want everyone to again recognize is the time, the serious literal time that it takes to witness a market cycle. Right, let's go, here we'll look at it. We'll kind of end off the day with this. Actually, no, I do want to look at gold and silver too, because we're going to see, I think, here, let's continue to read this. Let's make this a very long video today. So Williams also notes that the selling on the 11th to the 20th of the trading day has been the right thing to do 80-90% of the time, which is huge, with only one exception, that sales on the 17th trading day net gains 75% of the time. Not bad. So basically, you'd want to go short on the 17th. I'm marking that in my calendar. September 17th, ladies and gentlemen, that's a day to be short. Ultimately, not for the long term, but at least for the short term. Let's say a month or two. So extended market sell-off. Let's say 90 to 180 days, which brings us into February. So he says we're most likely going to have the pullback in the markets here. He's correct. This is what we're seeing. So the advanced decline here is the favorite indicators that stocks are using. So gold offers no hedge during these moments either. He also says that to expect to see gold to sell off, likely because of the dollar increasing. So what I wanted, he says, again, buy the dollar, not the gold. I am wildly bullish over the next 6 months. So I think what he means is that ultimately the market cycle is going to bode for the positive, but for the next 90 to 180 days, we're going to have this awkward nature of the cycle in the market, right? So knowing where we are with Bitcoin, do we go down to $6,000? Doesn't matter. Ultimately, we know that we're going to see a bull market cycle in Bitcoin over the next 2 years. Like, it's super close. So don't get too excited yet. Once we get the clear market indicators, it's noticeably there. Even more importantly, it's probably closer with Ethereum. Ethereum, I think, yes, could very easily come down to test $240 in the midst of another panic. Let's even put on the highly likely at this point. Although we do see a new trading range start to form here, so I would be interested to see if we fill and reaccumulate in this older trading range, which we see multiple times here, and here on the volume profile, which as well brings us down to 240. But here, this is the trading range we're kind of succinctly looking at. So what does that mean? Be patient when you're investing, guys. When you're building a strategy, know that it takes a lot of time and that there's time to be here. We just had a huge euphoric moment. I should have recognized it. The fact that I didn't recognize it, that I thought the backup phase would come, let's say, sooner, like Ethereum would come sooner in like 30 days or something, was just kind of silly of me. I think I was, I'm new in these markets still too. Now that I look back, I felt it. Like there's a few things that took place. And so we need to be able to recognize that euphoria as much as we need to be able to recognize that fear, because that euphoria is the moment that we're probably near a top, and it's best to, again, rediversify, take our profits off the table, and become more succinct in our market and our portfolio adjustment overall, especially when we look at the spring is the literal name of the spring, and the fall is the literal name of the fall. Maybe these market cycles are so old and so easy to understand that we just don't generally recognize them because we're too busy doing something else to be able to pay attention to them year over year over year. But as Larry Williams has pointed out, at least for him, in the last 22 years, going short on the 22nd of September is a smart thing to do. I think we may be literally witnessing the spring and the fall play out. So what that means is there is another spring coming, and it is not that far away. It's about 180 days away. So this is 180 days to correctly assume market position and watch an explosion. Although 5 years out, guys, we could be headed towards war, which would just be more fear, market cycle decline, and growth. So let's put a 5-year vision board on the table right now, which is 180 days that we need to start in, and this is our new market cycle assumption or thesis. It's called hypothesis. And then we have got a 5-year probably likely uptrend followed by a multiple year downtrend in some type of a war. That's not just a proxy war or a trade war, much more like kind of in your face war. It might, and I don't even want to speculate about that. I'm not smart enough. I haven't been around here long enough to know it. But if some of these people are right at the indicators that we're witnessing, we're going to see some type of fireworks gameplay between these bigger countries because they don't know what else to do when sentiment is shook this hard. Anyways, I don't want to feel this pessimistic. I'm wildly optimistic for the next 10 or 20 years into the technology that we'll see through the change of this. But again, think about how hard 180 days market cycle is now just being sideways. It's going to be kind of boring, but it gives you the perfect opportunity to do all your homework. So we're coming out with the next 2 PDFs for the Wyckoff, so you can learn about more distribution and reaccumulation patterns. And again, I just want to thank you guys all for being so patient with the growth of not just the market, but of the Arcane Bear family, because we want to be able to release these things as they become pertinent. I think it's a beautiful time to be very patient with everything you do in the market. Don't just run in on hype and say, yeah, Polkadot or DeFi. Play with small capital amounts so that you can learn. It is absolutely necessary for you to have a better understanding of what's happening in this sector, to be able to connect to Uniswap wallet so you can get free payouts for right? That type of stuff is important, but it doesn't cost you that much money. It should only cost you a few dollars, maybe $25, like $100 to play around with. Don't throw your life savings into it, but at least using that capital to educate yourself right now is one of the smartest things I think you can do. So thank you guys for sticking around. We're going to be going over and doing the DeFi for Dummies podcast. I think next week we'll start that, and bringing more guests on the show that are technically literate than I am. So we've got Matthew Finestone of Loopring coming on the show to help explain some things. Hopefully that will be up this week. And then we're also going to be bringing on more people that are technically savvy that can help us and the Bear family navigate this very quickly, very fast moving situation. So thank you guys all for joining us today. I hope you enjoyed the episode. If you did, remember to fire that thumbs up button. Leave us your questions or comments or thoughts down below. And yeah, I think patience and assumption of, am I feeling scared or am I feeling euphoric, is one of the best ways to judge the market. When you're feeling euphoric, everybody's making money. Double check, take profits. Very simple. It's just the same thing too. When the markets are down and everyone is scared, accumulate. Right at the spring, wow, from Fetch or even from Ethereum, we're talking about 400% runs from the bottom of the spring. That's when our buying spree should have began. We got close. We were in there April, May. We started buying Fetch. We started accumulating. We had a beautiful run up. We had some great profit-taking opportunities that we were able to lock in. And not as much as I should have, but now that's the lesson. Remember that these SOS phases can take a long time. We're talking about hundreds of days sometimes, and they can be noticeable in the portfolio if you're still sitting in a position. So my goal is to only be around 20 to 30% in that position by the time the SOS phase is done from here on out. no exceptions. And that's the way I started playing most recently. But again, just more proof to that. When you see SOSs or minor SOSs, you want to remain very liquid in your ability to reaccumulate, because we're probably going to see some type of drawdown. Even though we didn't in Tron, we didn't in Binance, the timing of Compman is irrelevant to us. So what we do is we wait for the turnaround when Compman is playing again, and we follow his wake. You don't try to anticipate it by buying into the downside unless you've seen him change the trend, like we had in the beginning of BAT and we had in the beginning of Matic. And again, this much bigger downtrend here, just to be aware of, is probably part of a much larger market cycle, which we can probably effectively call the spring and fall. Anyways, thank you guys for joining us. We'll leave it at that. And here's the Arcane Bear logo, and we'll see you again tomorrow.